Mrs. Settee, question and suggested solution. Video tutorial number 2. In this video tutorial we're going to look at the preparation of the income statement. In video tutorial number 1 we went down to the trial balance and discussed all the items and where we're going to put them. We also looked at the adjustments and how we're going to deal with them. It's important to note that every single adjustment has to appear in two places. Once in the income statement and once in the statement of financial position. So we'll now go have a look at the income statement. In the income statement there are going to be two parts. There's going to be the trading account part of the income statement, and then there's going to be the profit and loss account part. In doing the trading account part first, we're going to look for all the items with the letter T beside them. So we need the sales, the purchases, the opening inventory, and in the adjustments here we need the closing inventory, i.e. the inventory at the 31st of March. So we now look at constructing the trading account part of the income statement. So first of all I'm going to start off with my sales, and then it's going to be sales less the cost of sales. Of course, if you remember, there was nothing called cost of sales. We have to work out the cost of sales. The cost of sales is made up of the opening inventory plus the purchases less the closing inventory. So when we actually work out the cost of sales, we'll take it away from the sales and we get the gross profit. So what we need to do now is to pop in the figures. So again, just going back for 1 second, we can see there's the sales figures there. So that's what I need. So I'm going to put in the sales figure, and I'll put that in over there, 198,000. Now I'm going to step back into this column here, and I'm going to put in the opening inventory plus the purchases, add them together, and take away the closing inventory. So if we go and look at the trial balance, we can see that we have the opening inventory here, the item in the trial balance. We have the purchases figure here, and then the note at the in the additional information is the closing inventory of 38,000. So I'll pop those numbers in. The opening inventory 33,400. Add on the purchases. That brings us to 117,700. Then we take away the closing inventory, and this figure we bring it out and line it up underneath the sales figure. So we 79,700, and that's the total of the cost of sales, and we take that away from the sales figure to get a gross profit of 118,300. Now that is the trading account part of the income statement. We continue straight on down into the profit and loss account part of the income statement. It is all one statement, the income statement. Now I'm going to take these figures here and just bring them onto the top of the next page. If you have enough space, you could just continue straight on down. So here we are, top of the next page, and I'm just going to carry forward the gross profit figure of 118,300. Now what I'm going to have is I'm going to have less expenses. So if I go back to my trial balance, everything with the letter P on it is my expenses. So I'm just going to copy in these items here, and then if I have a look at the notes here, I have my adjustments there highlighted on the wage and salaries, the light and heat, and the insurance. I'll have to put in the depreciation calculations, and I'll also have to put in the revision for doubtful debts. So back here, less expenses, and just taking the items straight from the question, rent and rates, the wage and salaries, and remember there's a little adjustment on that. Likewise, light and heat is an adjustment, the insurance, and then we have the motor expenses straight from the trial balance, and the bank charges. Now there are some additional expenses. We have the provision for bad debts, we discussed earlier, and we also discussed it in video tutorial number 1. And we have the depreciation on the equipment, the fixtures and fittings, and the motor vehicles. Now that is the listing of all the expenses. So when we've worked out all those expenses, we'll take them away from the gross profit and we get the net profit. So I'm going to list the expenses in this column here. So the rent and rates, I'll just copy that figure straight from the trial balance. Go here, we can see it's 10,000. So I pop that figure in there. The wages and salaries, now I have to adjust that figure, and if we just go back and look at that, we can see the wages and salaries 25,800, but there is an accrual of 3,500. That means that amount should have been paid, but hasn't actually been paid at the end of the year, so we have to add it on. Likewise, the light and heat is an accrual. In other words, it should have been paid, but hasn't actually been paid, so it has to be added on. And for the insurance, it is a prepayment, so we're going to take that away. So the amount was actually paid during the year, but in fact it's not for this year, it's for next year. So even though 5,000 was actually paid, the expense for the current year is 3,000. The motor expenses and the bank charges, I'm going to copy them straight from the trial balance. So it's 6,000 for the motor expenses and 1,000 for the bank charges. The provision for bad debts, or sometimes referred to the provision for doubtful debts, that is the increase of 1,000. So if we go and just look at the question here, we can see there is an existing provision for doubtful debts, or for bad debts, same thing, of 1,000. And then we can see Mrs. Settee wants this increased up to 2,000. So she has 1,000 and she wants it brought up to 2,000, so we need to put in an extra 1,000, which means we will put through an extra 1,000 here as an expense in the profit and loss account. The depreciation of the equipment, now for this we're going to do exactly what we're told to do. So if we just go back to the additional information, and it says here, you are required to depreciate the following assets on a straight line basis. Straight line basis means on the original cost. At the indicated rates, equipment 10%. So we're going to depreciate the equipment at 10% on the original cost. So the thing to do now is find out what is the original cost. So if I just go back to the trial balance, there's the equipment, and actually it says equipment at cost, 64,000. So that's the figure I'm looking for. So that's going to be 64,000 at 10%. That's 6,400. So 6,400 is the depreciation charge for this year. So I'm going to put that in. There it is there. 64,000 at 10%. 6,400 for the fixtures and fittings. There's the cost there, 15,000. And the depreciation rate is 5%. So therefore I'm going to put in here is 15,000 at 5% is 750. And then finally the motor vehicles. So back up here, 18,000 is the cost. The depreciation rate is 20%. So what I'm going to put in here now is 18,000 at 20%, 3,600. Now that is all the expenses included. Now if we just go back here and check, if you look down through here, you've identified and used everything with the letter P on it, and we've put in all the adjustments at least once. The trading account here for the inventory, the depreciation, those three items have appeared, the adjustment on the wages and salaries, the adjustment on the heat and light, and the adjustment on the insurance. We've also put in the increase in the provision for bad debts, or for doubtful debts if you prefer. So that's everything done. So I'm going to add them up, bring the total out, line it up underneath the gross profit figure, take it away. So 68,550 is the total of all these expenses here. And I'm going to take that away from my gross profit figure here, and it'll leave me with a net profit of 49,750. Okay, and that is the income statement completed. Thank you.